All right, all right. Welcome, welcomes. Glad to have everybody here today. Let's see where this is at. First of all, I want to go through and thank everybody who came to the Pheasant Hunt Ranch with us this past weekend. And we had a grand time. Everybody was there, and we all got to go out and shoot some pheasants. I got some videos and some pictures. I haven't got them ready for you today. I'll try and get those ready for you. We can see those maybe tomorrow morning if I can get them online and show you a couple of fun things we did down at the ranch. And what happens at the ranch stays at the ranch. So, but we did have a good time. Lots of great food, lots of fun. Met a lot of people, made a lot of new friends. So it was great to have you guys that were able to make it. For those of you who couldn't make it, I'm sorry that you couldn't make it, because going to the ranch is one of the great things that I love to do, and we really had a good time. So we're planning on doing some more. The pheasant hunting is over, so we can't go to the ranch and hunt pheasants anymore because pheasant season is over. But it doesn't mean we can't still go to the ranch. We can still go to the ranch, and Bob, my buddy who owns the ranch, says that we can set up another meeting to go down there and hang out, talk about the financial markets, and meet each other and enjoy each other's company. And a lot of the things that we do at the ranch is just hang out and get to know each other and ask questions and talk and eat good food and walk around. And it's just a really good time to go and meet each other and talk about everybody's lives and how they're doing in life and what their goals are and how we can help each other do better. So it was great to have everybody there, and I'm glad you guys were able to, those of you who were able to make it, were able to make it. So it's because it's a lot of fun, and we're going to do another one, and shouldn't be as expensive because we won't have the bird hunting side of it. But if you want to just come and hang out and go down there, and they got a golf course, they got swimming pools, they got all kinds of fun things at the ranch. So we got four-wheelers, go ride four-wheelers and go fishing. There's all kinds of things to do at the ranch. We can just go there. Mostly what we want to do is just go hang out and meet each other and talk and eat good food. All right. And talk about the financial markets. We do put on a seminar so you can learn. And that's what the ranch is all about. And it's in central Utah. So we had guys fly in. We had the guys fly in from all around the country to be there. My son flew in from Nashville so he could be there. And we had some guys come in from San Diego. We had some other guys that were going to come in from back east, and then they suddenly couldn't make it. So we missed having them guys. But nonetheless, it's not just for the local guys. We got airports that are not too far away. You can land and come and join us as well. All right. So what we want to do today, though, is we want to come in and start doing a little day trading. And it's trying to get back into the swing of things. I've been off for a few days and haven't had any classes, and so it's kind of fun to get back into it. So last time we were here, we tried to trade a little Bitcoin, and Bitcoin wasn't moving enough to make it worthwhile, right? Do you remember that? And so we came in and we looked at the Bitcoin, and I wonder if today, look at it, it's been trending up nicely, and I have a little Bitcoin to the long side, so I'm glad to see that this is starting to rally a little bit in here. But I don't know if there's much movement in there for us to day trade it. If it broke higher, we might be able to take a position up. It looks like it's been moving higher. We got a little up, down, and going in here. A little bit of a pullback. Maybe we get a little rally. Who knows, right? We could put a little order in there. This is the micro, just in case it wants to go. Right here at 85,210, we could put a stop and just let that thing go. There's no signal right now. We want to see it break that green settled dots right there to give us a buy signal to go. So if we wanted to trade the Bitcoin, we'd have to sit here and wait for a minute, see if it doesn't want to start to go. Or you could just put your order in and put your stop pretty tight and just say, well, you know what? If it doesn't go, it doesn't go. If it does, we'll be there for it. Otherwise, we could risk, in this case, maybe $30 per contract. And we could just say, we'll just wait and see if it wants to go, continue higher out of here. This is what we're looking for, though. You can see the nice little trend lines in here. You can see this is drive 1, this is drive 2, this is drive 3. And so generally at the top of drive 3, we don't get a whole lot more. We generally start getting retracements, but this is down on a very small time frame. And the market's been bullish, and it's crossed over the 200 and the 100 period moving average. I'd like to see it rally right there for us just a little bit, just to see if we can't put a position in there while we go look at something else. It's a little boring right now. Come on, do something for us. Let's just come in here. Let's put a couple of contracts in here. Should we do that? We'll just put 2 of them. I'm just gonna buy it right now. Just get in, and I'll put my stop just right here. We'll just put our stop right underneath that 85,280 just to see if it wants to go while we're looking at something else, all right? All right, we're in. So that's Bitcoin. Let's go into Dow and take a look at that one. That's the daily chart of the Dow, and I hate to say it, folks, but that is not bullish at all. That is very much a bearish trend. And we're coming in with our second little ABC pattern in here. You can come in here and draw this down, ABC, and that thing says it's getting ready to punch. It punched those blue dots and down. This is the next spot. I hate to say it. I don't want to say it, but that's where that thing looks like it wants to go. Now, it doesn't mean it has to. I mean, this is the first drive down, right? So this is drive 1. This is a counter trend, and this is drive 2. And that is an Elliott wave. So if you have drive 1, drive 2, drive 3, the standard Elliott wave is to go back up after the drive 2, right? Oftentimes what we'll see is the market go sideways. This is classic accumulation distribution model from the Wyckoff theory. So for those of you who are familiar with the Wyckoff theory, I talk about it in here all the time. So this is the daily chart. So be mindful of that. Let's come in here and tag these things. This is an X1S/A1. And so that means that is basically what you can say is you can say this is a 25% probability that the market's going to reverse and be an uptrend from here. And it did have a nice little move here, but it failed, right? I mean, it has to break above this high right here to be considered a success, and it failed, which is what we expect. We don't expect XOS1A1s to be the return, the rebound and go up. So that did exactly what we expected to, which is to fail. And then we expect it to come down. And this one here becomes our X2S A1. An X2S A1, so it'd be the A1 to the upside, or this would be the A1 to the upside, first drive, right? But that failed, so it's the X1S. So that brings us down to X2S. This is the second attempt at making a rally. And this one we generally consider this one to be about a 50-50 chance, right, of going up. And so that's not bad odds. We'll start putting money on a 50-50 chance in the stock market here, because that's a traditional Elliott wave pattern. You have 3 drives up and 2 drives back down. The market generally goes through that, what we call the delta cone of probability, which we measure with our Fibonacci ruler, right? So if we take our Fibonacci ruler, we go from the low of this first drive to the high of the third drive. It brings you back into the Fibonacci sweet spot between 38.2 and 61.8. And that was right there, and that's where that market's coming. And it came down and broke down, went down to 78.6. So I had a complete 78.6 retracement, which is a little bit more rare, kind of like, rubber banded, overshot it a little bit, and it pulled it back up into that 50% level, just like a train on rails right there. So it came up, and these mathematical models, a lot of people are like, oh my gosh, the world is falling apart. No, actually it's not. These things are just absolutely following the mathematical models. I got to stop saying like a train on rails, because guys make fun of me because I say that all the time. But the markets do it all the time. They do they're like a train on rails all the time. They're hitting these numbers, these mathematical models, just like right out of the manual. I mean, you couldn't draw them any more closely. And so when they do that, it makes it a lot easier to predict market direction. But everything we do is based on probabilities, right? So our probability at this point is that we're going to anticipate that this market is going to, it has a 50-50 chance going up here. It broke the blue light, started a rally, failed, came down, and it broke the blue lights to the side, the downside. That's not good. It should not have broke those blue lights. And that doesn't mean it can't. It certainly can, because the overall longer term signal is the low point right here, which is right here where I'm drawing this yellow line. So if it breaks below that level right there, we're going to expect it to come all the way down to this 100% level. And that's not good. Nobody wants to see that. Nobody wants to see the market to flush all the way back down here to a third drive. That would bring us down to a third drive where we'd anticipate a rally and a turnaround and a little upswing. And then that would break the blue lights coming down on the third drive. So it'd be drive 1 down, drive 2 down, drive 3 down. And we would have to label that one clear down here. That would be X3S A1. And when we start getting down here, the odds of that turning around become much higher. That'd be roughly a 75% chance that down here that market would turn around. That'd be the bottom. And we'd anticipate a continuation of a rally and an ABC pattern to the backside up. Okay, so that's where we would be if this market comes down here, and that's where it's headed. Now, we oftentimes see this market go up, rally, come down, break these blue lights, stay above this low right here, and then turn around and go back up again. And now you got blue lights up here coming in, break those blue lights, and that would be the bottom formation, and that would be a continuation of the uptrend. The problem with that pattern, when it does that, is that's called a butterfly pattern. And you can see that kind of a little butterfly in there. So we come in with the little butterfly pattern in here. This is called the Gartley butterfly, if you want to go look it up on the internet. And then that's what that little butterfly pattern would look like if that thing continues higher. And the problem with the butterfly pattern like that, when we get this little pattern in here, we don't like that very well, because when it rallies and comes all the way up here, that becomes very bearish, and we usually see that thing flush again and come all the way back down really hard. That's traditionally what happens. If you want to look at the manual, look in the book and see where we've seen this happen before. Those are the kinds of patterns that we get. So here we kind of really want to see this go up and give us some little ABC patterns in here and continue the uptrend, break the blue lights, then go back up and continue higher and break these highs. But just remember, sometimes that becomes a little butterfly pattern and flushes all the way back down again. So it depends. There'll be, it depends on what the big boys want to do and how they want to run their cycles and where they're at in their accumulation distribution model. Sometimes it doesn't get a big flush down. They'll take it through another accumulation stage right in here, and the market will go a little bit sideways, kind of like what you're seeing here, right? So might be here, and then that would then take off and go up instead of, in this case, turn and flush down. All right, so that's the nature of the beast, and that's how we generally read these things. And it's all probabilities based on breaking above previous highs and previous lows, being mindful of other things like what the fundamentals are, because they like to drive these patterns based on fundamentals to help them move them where they want them to go. And then, where we're at in the counts and what the probabilities are. But that's kind of where we're sitting with the Dow right now. I hate to say it, but that's very bearish. We're sitting on a bearish signal right now. Doesn't mean it can't rotate and start to go up, but just telling you, we're sitting at a 50-50, and it just hit a very bearish signal. Very bearish. All right. So let's come and look at the NASDAQ. This is the daily chart of the NASDAQ as well. And now remember, this is highly, this is very much looking at the big boys like Apple, Amazon, Netflix, Google. Who else? Tesla, Nvidia, some of these big tech firms, right? So that's kind of what the NASDAQ's doing, and it's flushing down here as well. So we had this little double top formation up in here, almost a triple top in there, didn't we? So it come down, rallied back up, comes down, went back up, created that little W pattern, and then flushed. And so that's that little topping formation. And then you can see that's right out of the manual. If we pulled up our little book, we could see that pattern in our little book. So, and then we get this nice little shelf in here, and we get the down arrow, and we first got the up arrow and then the flippy flip to the downside. That's not good. Again, I hate to say it, guys, but that's very bearish. Doesn't mean it can't turn and break the rules and continue higher, but that's very bearish. All right. So the problem is that this one actually did break this low point that we were talking about in the Dow, because the Dow hadn't broken it yet, but there it is, and it broke it right there. Now we'll see, going to see if it can stay above it. If it can close above it, that might be positive, and we might get a little bit of a relief, and it might decide it wants to turn and go up from here. But this is very bearish, and we're anticipating at this point, because it did break that previous low, our next target is right down in here. All right. So there's some additional downside potential, and this is a redistribution for the downside, or accumulation to the downside. They'll run it sideways a little bit, and they'll run it one more time. So if we come in here and count these, I'm going to come in here and call this one here. This is the X1S/A1, which remember has a roughly, we're going to say a 25% chance of going up. And I think that's where we're at now. So that's failed. It failed. It broke the blue lights. We got the down arrow. And down here, this is where we would come in, and where we get the blue lights are a little bit more accurate than those green ones, but they're close enough for what we're talking about right now. This would be an X2S A1. That's your probability, and that one has roughly a 50% chance of making your rally off of that 90, 80, 90, 100% drop down in here. So this is where we would see this market come to before it turns and starts making another one of these little shelves. It could break those shelves and go down again, and then we'd have a drive 3, right? Drive 1, drive 2, drive 3. Not what we want to see, but you know what? That's where that's you got to make it. You got to call it. And here we got a nice little, this is the same thing. This is the Russell. We got the drive 1, we got the counter trend. We got the drive 2, we're on the counter trend. We're going into a drive 3. I hate to say it, guys, but we're going into drive 3 on the Russell. We wanted it to stop at 2 and go at 2, but it doesn't look like it's going to. And if we go out to those long-term charts, remember, we start looking at the long-term charts, it shows there's a lot of downside potential still left in the long-term weekly charts. If we come out here to the daily on the S&P, we're getting that same thing, that same pattern in here. We got that little three topping formation. It's right in there where I got rid of all my long positions, all my growth positions, and all I had were my hedged positions on. And look at that little, again, a little triple top. So 1, 2, 3, and it couldn't make it on the third one 3 times as a charm. Boom, down it went. Now we're sitting here on, this is actually, I'm going to call this just a, you want to kind of call it, you kind of want to call this your X2S right in here, but I don't know. It just looks like a, well, hindsight will tell us if we've calculated these right. What we're trying to do, remember, we're trying to reverse engineer what the big boys are doing. So this is going to be an X1S A1. It could be an X2S A1 if we want to count this one, but this was so close. I just want to call that a triple top and then a failure right there, and then that's your first down. So that's your first drive down, not this one back here. I don't know. We'll probably turn on the bulls and bears and see better, but we're now below the 200 period moving average, and this means we're going into a bearish market, right? So bear trend here, and that's your little shelf. And the next Fibonacci projection off of this thing, if we go just off of this peak down to here, AB, that's our retracement. It came back 41%. The next projection brings it right down in here. I don't want to see that, but that's where it's at. And that's probably where they'll drive it to, because if they can drive it down there, which probably won't be hard for them to do, they'll get more people to sell to them all the way down here. They're just trying to get you to sell your shares so they can buy them back. And that's what they want. They want you to sell out all down here and lose all your money so they can take your shares. And then they can turn this thing around and start making money back up again. So they'll buy them all down through here, dollar cost averaging all the way down. Remember what we've talked about in the past, where they're trying to build an upside right pyramid. So they want to build a pyramid that looks like this, right? And so that's what their pyramid looks like. So they buy all the way down as the market falls, and then they want you to sell all your shares out to them. So they buy all the way down here, dollar cost averaging all the way down, bringing their average down. And then they turn around and they pop the market, and then they start to sell all their shares all the way up the new uptrend, which is where we retail traders come in and we start to buy all the way up the uptrend, right? And then that's where we build an upside down or an upside right pyramid. Actually, what we do is we build an upside down pyramid. We build our pyramids like this. And they actually build their pyramids like this. So I drew this wrong for them. They actually build their pyramids like this. So they start to buy all the way down the uptrend, which brings their dollar cost average down, getting all of their average price clear down in here. So their average entry is way down here like that, right? So they're building a pyramid like this. Now what they'll do is they'll try and sell out their pyramid going back up like this. And who do they sell it to? They sell it to us. And so we retail traders, we like to buy pyramids and we like to build our pyramids upside down. I can't draw an upside down pyramid. So we're going to come in here and we're going to start buying all the way up this uptrend, right? And what that does, that dollar cost average our positions up here, and then we get all real top heavy. So our average prices start to go up, and then we get real top heavy, and our average entry price is way up here, while their average entry price is way down here. So they sell all the way up to us as we're going in. We're buying. They're selling. And because we buy, we end up with our average price up here. And then all the market has to do is just go this far, boop, and we lose all our money. And guess who takes it? These guys. And that's what's happening right now. So what happened is all of us retail traders, if you come back here and look, right back here, we've been buying. We were really happy. We were just happy as clams in here, right? And we were buying. Oh my gosh, look, I'm making money. I'm rich beyond my wildest dreams. I'm going to buy more. And so what we did is our dollar cost average got way up here. So our average entry price was way up there. And all the market had to do is drop that far and we're underwater. And we start to sell. Sell, I can't hold on any longer. I can't stand this. Oh no, I'm losing more. Oh, lose. Sell. And those big boys are just buying everything up right here. Dollar cost averaging all the way down. And they end up with an upside right pyramid. We end up with an upside down pyramid. And that's how they take all our money. And they do that on purpose. They do that to us on purpose. We just be mindful and realize that we don't want to buy all the way up an uptrend. We want to be selling up an uptrend if we want to be like those guys, right? So once this thing gets down in here, we want to be buyers, but we don't want to keep buying all the way up in here as the market starts to pull higher, unless we're smart enough to realize that that's what we're doing, and then we're going to bail out at the top. And that's what I did. I bailed out at the top right up in here. I got all my long positions off the table up in here. I didn't hold on to them as they dropped. And I had all my hedging positions on here. So I'm still in the market. I just had them all hedged in here. So all my hedging positions. And that's why I like those yield max funds. I use those as hedges on the way down. And so, it doesn't mean we don't lose money. We still lose money. We just don't lose money as quickly if we're hedged. And if we got a good hedge, we can even make money on the way down. And then we can dollar cost average in as we go down, just like these guys. And we can build a big upside right pyramid. And that's what I've been doing. I've been building my pyramid as it comes down. I'm getting more and more shares, bringing my dollar cost average down on my hedged positions. And I'm anticipating, looking for these markets to start to rally where I can start to take my profits again. All right, so that's the name of the game. Let's go down to the 2-minute chart. Where it looks like we're breaking right across the S&P on the 2-minute chart right now. We could come in here. We'll go buy, stop. We're going to just put our stop right in here on that little yellow dot. Edit. Trail, ATR dot, and say okay. And we'll just let that baby run, see if it wants to give us some money. Now, let's come over to what's happening over here on our Bitcoin. Our Bitcoin's not doing anything for us. Let's go to the range 50. That's where we're at. That Bitcoin's dying on us. Dumb Bitcoin. I thought maybe we'd get a little break on that thing while we were off pontificating about these other markets, and it's not happening. But we're down $30 on it. We'll see. Let's just leave it right there right now. If we get stopped out, we'll get stopped out. You never know. So that 2-minute on the S&P still trying to go up. It says it's up 125. Let's see if it wants to go. 270, 200. Come on, baby. Let's keep up the good work here. So our goal is to let's come in here. Let's add OCO. We're going to come in here. We're going to set our target. Our goal is to make $500 before the market closes. So if we just set that at $500, if it hits that, we'll just take our money off and run away. And I can delete this one now. I can delete this stop order. And I can come in here and change this OCO. And we'll put this OCO, which is down here, ATR stop, and we'll say, okay. All right, and we're just trailing that little yellow dot, which is the ATR, which is what we put out on the little marquee today, right? So let me come down here. So let's come say hi to a few people. John Gaisley. Okay. I got it right, John? John Gaisley. I talked to John's in my class at the university. He came up to me last night and says, you know what? You do usually do pretty good with my name, but then you also butcher it once in a while. You start out okay. Gaisley. See, that's not, I think that's butchering. I think it's Gaisley, he said. So we're good. It was good to see you in class last night, John. We have fun together, don't we? All right. And then we're in here. Here's Kirk. Nice to see you, Kirk. Just got off the phone with Kirk, and hopefully you got your subscription service to Pit News Magazine worked out. We got Bruce in here saying hello. Good afternoon to everybody. It's nice to have you in the. See you, Bruce. John's like, I think I did it right that time. Gaisley. All right. So it's good to see you. We got a lot more people watching the class than what's putting up their little marquees. If you guys want to say hello, we'll make you famous. All right. We're just trying to wait for these little, for the market to stay above these little yellow dots. And that's really all there is to, it doesn't have to be much more. Sometimes we take trading and we try and make it more difficult than it is. We can read these charts pretty easy when you look at them and you get them all set up right, like I have mine. I like to use the Heikin-Ashi bars and I like to use the minute bars, but those Heikin-Ashis are pretty good. And then I like to use that little ATR, which is just the average true range. And we just set that. I like to set it at 1-on-1, and that's a good starting spot. It doesn't mean you can't move it. The one thing I can't do is I can show you all these mathematical models. I can show you where the signals and the triggers are. Sometimes we make things more complicated than they really have to be. We just wait till we get some nice green moves and nice green bars like this, and then we get a little pullback in here, and that gives us another opportunity when it turns green to go again. And you just play the green side or the red side. I mean, you don't have to make it much more complicated than that. And as long as it's above those yellow dots, we kind of stay in. When it goes below the yellow dots, we go the other direction or get out. The one thing we can't do is we can't make the market move. So that's why I have these voodoo dolls. All right. So I can show you the strategies. I can show you how to get in. It doesn't really have to be much more difficult than this. You use the right software and it makes it relatively easy to trade. The problem that you can't do is make the market move. And that's what makes trading hard. We try to make the markets move, but you know what? This is my power and authority in making the market move. I put my signal in and then I start jabbing the the voodoo dolls. Come on. You can go higher. You can go up, right? We want it to go up and give us $500. So we just need, come on, little voodoo doll, make the market go up there. We'll stab you in the neck. Yeah, just like that. That's about all we have in power of making that market move. If the market doesn't move and go higher and give us our money the way we want it to, we just get back out. Take small losers. We generally say, right, cut your losers short, let your winners run. And all we're doing is letting the winners run. Oh, the voodoo dolls are out. There's Chris. Nice to see you, Chris. We'll put up your little marquee there, make you famous. Nice to have you in class. Yeah, when we pull the voodoo dolls out, that's when we're getting serious, right? We got a position in the market and we need it to rally. So we pull out the power dolls. And we start stabbing them in the neck. When we start pulling out the voodoo dolls, we know things are serious. We're almost there. We got $325 on this one. We're down 28 on our Bitcoin. Nothing we can really do. Just kind of sit here and wait, see what happens. Our trailing stop is automatic. It's just going to trail up on those little yellow dots. If you don't want to have your limit order in there at 500, I got that set in there to give us a profit at 500. You don't have to put it in there. You can move it out. You can get it, get rid of it. Put it up here at $1,000. Put it wherever you want. Just let the trailing stop take you out if the market keeps going. If it's nice and strong, or you can come in here and put this at 500. Take your money off at 500. It's coming back a little bit. We're all the way back down to zero. So that market just didn't. These little voodoo dolls, maybe I have to get bigger ones, bigger voodoo dolls. These maybe are too tiny for these markets. They don't have enough power to come in here and push these markets up. Because right now, this market is not staying above those yellow dots. It's coming back and going to touch that little yellow dot right there. And we're going to get stopped out with a loss. Nobody wants that. Well, that was a sad state of affairs. Len, you were up $225 at once. Why didn't you take it? Well, when I put in 500 as my target, you said, why are you putting in 500? What if it goes to 1,000? Well, that's the nature of the beast. We're just not getting much of a trend here. It's kind of weak, isn't it? We need strong trends. We like strong trends. That's a nice little trend, a little starter there. I thought maybe we'd get another little strong one out the top. Here, a little ABC pattern. I thought we'd get another little strong push up in there, but it kind of died in here. We took that one and it failed. So it's getting a little weak on us here. So I don't know. Is it going to reverse? Let's come to the 2-minute Russell. Russell's starting to flush. Are we going to get a downtrend? Are we going to get this down, up, and another down like that? We don't know. Nobody knows. So what we do is we just, if we want to take a short position, we put it on there. We don't take a big risk. And if it goes, it goes. If it doesn't, we get out and we do it again. It's kind of all converging, all those 100 period moving average, 200 period moving average, VWAP, they're all right there. The ATR, all right there at one point. Let's see what this bar does here on the little Russell. Doesn't mean it has to go anywhere. It could just go sideways, and that's the worst thing. That's the worst thing that could happen is the market could just go sideways. Nobody likes a sideways market. Those suck. Can't trade a sideways market and make money unless you're selling options premium. That's the way you make money on a sideways market. But we're not doing options today. We're just coming in here and trying to catch a trend. Now it's trying to go back up. What do you want to do, guys? MACD's up, stochastics is up. We've had a nice rally. We're breaking with green, trying to go from red to green. Got 30 minutes till the bell closes. Do we think it's going to break higher? Let's put a couple on here. And we'll put our stop at that little green dot, and we'll just see if it goes. If it goes, we'll go with it. If it doesn't, we'll get right back out again. If we go into 3, though, that's going to be a bigger loss. We'll just trail that on the ATR. See where it's going. Now, we're down $250. So what I like to do when I'm down $250, now I know a lot of guys will tell you not to do this, but I do it. I do it, all right? I don't care what guys tell me. I do what I want to do. And what I want to do is I want to get my 250 back. So I come in here and I take my 250 back by putting that in there. And if it'll give me my 250 back, I'll take it. And then I can always trade again. Then I don't feel like I'm trading from a point of negativity. All right. All right. So we got our money back. And so we don't feel so bad about ourselves now. Now, again, I like to do that. A lot of guys will tell you not to do that because you just took your profits off when this market might be going to the moon and you missed out on the moon. Doesn't mean you can't get back in. You certainly can. Let's just see what this little bar is going to do. Let's come down here and we're going to go to the NASDAQ. Oh, look at the NASDAQ's taking off. This is the mini. Getting a nice break above that. Is that the 100? 100 period moving average. You can see that 100 period moving average. Came in there and broke above that nicely. Now that's probably what triggered that thing to go. Remember, a lot of guys trade mathematical models and they're not trading themselves. The computer's trading. And so when these signals come in from these different models that a lot of guys trade, you got to watch those because that's what'll cause a market to jump and run or take off or not take off. And the more people who are watching that and trade it, more likely it is the market's going to go, right? Let's come in here. This one here is breaking higher. Dow Jones starting to rally. Let's see if we get a little. Uh-oh. That's the shorter term down. It's starting to pull back. So let's watch this. See, if you look at the 2-minute, you're like, I'll get into this. Let's go, go, go. Let's get into this, baby. But if you come down here and look, it's pulling back. So what we can do is we can come in here, and I want to show you. We can come in, and I was trailing. We could trail on the ATR, just like this. You click that one, you put it in here, and it's going to trail down on the ATR, and it'll intercept to the upside as soon as that thing turns around, right? Crosses that yellow dot, we'll take that long position. And then this sets your limit up here and your stop down here, but it's trailing right now on the yellow dot for a reversal. So this is the reversal strategy that we talked about. I put out on the little marquee. We're going to reverse. There we go. Now we're back in the long side. Now, hopefully it doesn't just, go up, touch the yellow dots, and then start to fall once again. That would not be fun. We'd have to watch and make sure. But as soon as that yellow dot flips to the other side, watch this. Hasn't flipped yet. Come on, flip. We got to get that one more bar. There we go. See that stop jump to the next ATR automatically all by itself when we set that up. You want to see how that did that? Let me give you the settings for that. So I come in here. This is 777 trail ATR. So there's the settings in Track and Trade. Do what I just did. Take your little camera, point it out there, take a picture of that so you can put it into your software. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. So there we're still going. See our trailing stop coming in there? It's trailing up on those yellow dots. So if the market's moving nice, that's a good little strategy. Of course, it can beat you up pretty good if the market just goes back and forth across those yellow dots, which happens sometimes. But when the market's, making a little trend here, we can pick some money up. We're at the yellow dot. The yellow dots have started to go sideways because the market started to go sideways. It's going to hold your stop back just a little bit to see if the market wants to go. If it doesn't, we'll get stopped out. Okay, we got out. So we're up $380. So that was a nice little move for us. Now it might turn around and just flush again. And you could have gone the other direction. But we were already long, so let's come in here and look again at the 2-minute chart and see what's going on here. It's getting a little lazy in here, isn't it, on the 2-minute chart? But that range bar 6, it's a small mover. Let's wait a second and see if we want to put in another one. We can come in here and drop that in there and do it again. Now on this market, it's a little bit big, but we can manage it if we want to. The market's not really that little snaky in here. Let's see if it wants to break and do that little uppy thing one more time. Come on, little uppy thing. How do you get your money back? You put a limit order in there and just take your profits off at the profit zone of how much you get your money back at, how much you're down. Okay, it looks like we're trying to break back to the long side, and is it gonna fail this time? We don't want it to get a whole lot of money. We'll come in. Oh, come on, let go. Hey, yes, I want to do it myself. I'm clicking the wrong button. We'll put that under there. If it takes us out, we'll be out. There we go. All right. Keep it going. Edit. Let's put this on the ATR once again. And when that yellow dot flips, there it goes. Jump to the yellow dot, and we'll see if we won't go again. That little premature jumping in there. Okay, we're up $500. If we took it off right now, boom, we'd be out. We'd have our $500. $500 a day keeps the doctor away. Okay, let her go, let her go. Cut your losers short, let your winners run. Bring this down. If it'll just come up and touch that previous high, we'll take it off right there. Come on, baby. Touch it. You know you want to. You know you want to touch it. Oh, it's like candy. Come on, come on. Try one more time. If it doesn't go, we'll just take it off out. Did we break our 500? We did. $550. All right. $550. Let's go over and look at our Bitcoin. Yeah, look at Bitcoin. Good thing we didn't sit here and try and trade Bitcoin. What a worthless market. Didn't do anything for us today, did it? Good thing we had that NASDAQ. Was that NASDAQ or was it Dow? That was Dow. Good thing we had the Dow. That's the one that paid us off today. All right. There we go. So we got a long-term payoff today. Told you this lesson. Talked to you about upside down pyramids. Don't build those. And had a good little Dow day. All right. The software I'm using is Track and Trade. If you want to use the software I use, go over to trackandtrade.com, pick up a copy. We're using the futures version. There's no pattern day trading rules. So you can open up an account with as little as $2,000 to $3,000 and trade to your heart's content. It's very simple and easy. I'll help you. I'll help you set up your software. So just come back to these classes, and whenever I do something, I try to show you the settings, and you can put your settings in here and do what I'm doing. And the more you come and you get exposed to it, the easier it is for you to do yourself. All right, there we go. We just dropped the April version of Pit News Magazine. So if you guys would like to have the April version of Pit News Magazine, I can show you the cover now because it's been released. Let's go over and I'll show you the cover of Pit News Magazine for the April issue. I'm pretty proud of it. It turned out really nice. pitnews.com/magazines/2025 04. Okay. Let's come back over here and I will, if I can get this up here. Hold on. Stick with me. Get your 50% off of Pit News Magazine. Yeah, I can't get this thing to do what I want. All right. No, how come I can't get it to do what I want? All right, there you go. There's the cover. Yeah, I'll give you a cover shot. There's the cover of Pit News Magazine. How come it's not coming up? Add to stage. Remove from stage. Add to stage. There we go. There's the April issue of Pit News Magazine. April showers. So come along, join Pit News Magazine, and we'd love to have you over at Pit News Magazine. You can get it for 50% off right now if you use this code. 50% off. That's the code that's going to give you 50% off. And then you get Pit News Magazine. You can join the club. Hey, the great thing about Pit News Magazine, it's got all the articles are recorded, so you can listen to them like podcasts. So, and then of course the written word is there, so you can always refer back to it if you hear something in the article that you wanted to remember. And then a lot of times we have the videos, but the videos, of course, are part of what we're doing here. These are the videos that go along with the magazine because we are Pit News Magazine over here. All right. All right, guys, I'm going to let you go. If you've had fun and you like making $500 a day to keep the doctor away, go ahead and hit that little thumbs up, hit the little bell, subscribe, come back and join us again. Tomorrow morning, we're going to be doing stocks. Today we did futures. Tomorrow we're going to be trading stocks, and we're going to check our stock portfolio and see how it's doing. And that starts at 8 o'clock in the morning, Mountain Standard Time. Make the adjustments for your time frame. But we'll be here at 8 o'clock in the morning, Mountain Standard Time. Don't be late. See you tomorrow morning. I'm going to show you some pictures of our pheasant hunt. So be here for that. That'll be fun. All right, here we go.